Hey everybody, it's Josh Alexander, and on today's episode, myself and Mina, a mortgage advisor from JMAC Lending, will be going over some of the most common questions we're asked from first-time homebuyers on both the lending as well as the agent side of things during a transaction. So let's get into it. I'm going to have Mina go ahead and start and ask some of the questions she gets in terms of what to look for an agent, and then I'll be doing the same thing, what questions I get in terms of the loan side of things, and we'll just kind of go back and forth from there. So Mina, go ahead and take it away.
Yeah, so basically, we get a bunch of different questions all the time, but I think when it comes to the real estate side, especially if you're not selling the home and someone's looking to buy a home, the question is, do I need to use a buyer's agent? And so if you could answer that, that would be perfect.
So that's a great question to start on, Mina. So one of the things that I heard a lot when we were allowed to have open houses would be buyers coming in. They're just starting the process, so they haven't done much research yet. They're looking around, touring these open houses, haven't really talked to any agents yet. They like the property and they come up and say, hey, can I just go through you to purchase the house? So the big thing I really want to emphasize with this is something called fiduciary duty. So in California, legally, yes, agent is allowed to represent both the buyer and the seller, but it's something I really discourage. And that's because when a seller signs a contract with a selling agent, they're signing something and basically saying that I have a fiduciary duty to basically put your interest above my own, above anybody else's. So everything I do, I need to have your best interest in mind first before I think of anybody else. So when a selling agent helps the buyer purchase the home, they're helping both the buyer and the seller at the same time. And they're basically saying that somehow I'm putting both the seller's interest as well as the buyer interest ahead of everybody else's. Now, when you're helping that transaction, it's called dual agency. There's really no way to navigate that without having to really have a thin line of, is this best in the seller's mind? Is this best in the buyer's mind? Who am I really helping the most here? Because you can't really 100% help both the buyer and the seller at the same time when you're doing these dual agency deals. So most of the time, it's something that I really don't suggest doing because you're putting yourself at a disadvantage. So when you work with a buyer's agent exclusively, the biggest advantage of that is they're going to be representing you and putting your interest above everybody else's. So they don't know the seller. They're not trying to cut any deals with the seller. Not that all agents are bad, but there are agents out there that will try to get the best bang for their buck and try to put as much money in their wallet as possible, which is why they do these dual agency deals, is because they end up usually getting more money from both the seller and the buyer side of things and making more on the deal. So that's why you do see these happen occasionally. So when you're talking about a buyer's agent, they're going to be doing some things that the seller agent that you really don't know if they're doing 100% because you never really know because they're in contact with the seller. So you never really know whose interest they're putting ahead of yours. They could be an honest agent, but even an honest agent is really going to have a hard time walking that line between who am I really best representing here, the buyer or the seller. So when you're going through the initial stage of putting in an offer, a buyer's agent is going to look at the comparable sales in the neighborhood and be able to determine what the fair market value of the home is. Now, if you're working with a selling agent, they're going to be hopefully doing the same thing with you if you're trying to use a selling agent to purchase the house. But in the back of your mind, you have to know, hey, they're also representing the seller. So are they giving me the comps that are a little bit higher in order to get the seller the better price? Or are they giving me realistic value of the home? And that's something that there's not really any great way of knowing unless you're doing all the research yourself. And in that case, why are you using the selling agent to go through the whole process when you're doing all the stuff on the back end by yourself? It doesn't make much sense. So that's just one example of why a buyer agent is a little bit nicer to have versus trying to deal with the selling agent when you're purchasing a property and having that dual agency conflict of interest on there. Another thing is you're not just negotiating the beginning of the escrow before you get into escrow about the purchase price of the home. That's one negotiation. You're going back and forth between the buyer and the seller trying to agree on a price. But there's a lot of other negotiations that happen inside escrow that you really want to have someone that's 100% on your side, because a lot of times these things can get very messy and the gray area starts to come out a little bit more, again, when you have these dual agency issues with the buyer and the seller being held by the same person. So one instance of this would be, okay, you're in escrow, now you're getting the inspection done, you find a bunch of things wrong with the property. So if you're being held by the selling agent already knows what the seller is most likely going to fix and what they're not going to fix. So there's a good chance they're going to try to also lead you the same way, saying, hey, let's go ahead and ask for these, this, and this. It's probably not worth it asking for this because the seller is probably not going to go through and ask or basically approve that request on there. So they might be looking at the lens through the lens of what does their seller want, and they might not necessarily look at it from, hey, let's try to get everything we can during this repair negotiation to try to make sure that the buyer is getting the best house possible with basically exactly what they're looking for in terms of what's repaired, what's fixed before they move in. So again, you never know. Even with honest agents, it's really hard to find out if they're kind of leaning towards the seller because they have that fiduciary duty to help them as well, or they're really looking out for your best interest. So that's one negotiation. Another one is appraisal. So let's say you purchased the home, or you're trying to purchase the home through escrow. You have a loan on it, so it has to be appraised. So let's say you're purchasing it for $450,000, and the loan appraisal comes back and only worth $440,000. So at that point, you have to have a secondary negotiation of price because there's a $10,000 difference. The appraised value said it was $440,000. The offer price you put in was $450,000. So if you're working with the selling agent only, they're obviously trying to keep the deal together. They're trying to make sure their seller is making as much money as possible. So the first thing they're probably going to be talking to you about is, okay, let's see if we can maybe do a 50-50 where the buyer comes in with $5,000, the seller will lower their price by $5,000, we'll meet in the middle. If you're working with a buyer's agent, they're usually going to try to give you the best deal possible, which means they're going to say, hey, it only appraised for $440,000, so we're not willing to pay over $440,000. And again, it's all part of the negotiation, but in many cases, when you have someone on your side instead of someone working both angles, you're going to get a better deal in the long run because you're going to be able to negotiate with that stance of knowing that you don't have the other party's interest in mind. Another one is the close of escrow. So let's say, for instance, you're going through escrow, the seller is purchasing another property, but their property, all of a sudden, that they're trying to purchase, they can't close escrow on time. They have to delay it by 2 weeks. So that has nothing to do with you, but because they can't purchase that property, they can't sell you the property that you're trying to purchase because they have nowhere to go for 2 weeks until that property closes. So if you're working with just a selling agent, a lot of times they'll bring this to a different light saying, hey, it's no fault of the sellers, but we can't really close on time, so we're going to have to delay it by 2 weeks. Are you okay with that? And that's something that they'll probably lead off with. Now, again, the buying side of things is, let's say I'm a buyer's agent helping a buyer. Okay, we all agree that it's going to be a 30-day escrow. Now you're trying to extend it by 2 weeks. Okay, so now the buyer has to pay extra 2 weeks of rent or an extra 2 weeks of mortgage if they're just buying another house from the current house they live in. So that's really actually eating more of your money away as a buyer because you're paying for rent for another 2 weeks while you're waiting for this house to close. So what I would usually do is say, okay, fine, if it's closing 2 weeks later, then that's fine, but the buyer's incurring costs because of this delay. So here's the cost, here's the proof of the cost. We're going to have to say, hey, if the seller has to delay the closing, we're going to have to basically charge the seller this amount of dollars per day because they're breaching the contract and not closing on time. So that's, again, another indication of why you really want to have a buyer's agent on your side, because all these small negotiations that happen during escrow, you want to have someone that you know is 100% looking out for only your interests, and you're not always having that thought in the back of your head, okay, is this something they're telling me because it's in my best interest, or is it something because they want to get this deal closed and the seller told them that they need to have it done this way? So that's one of the reasons why you really want to have that buyer's agent. And then the final one, which sometimes can be most important, is you don't pay for the buyer's agent representing you. So the seller is paying the commission of both the selling agent and the buying agent. So when you're being helped by a buyer's agent, you're not paying them any extra money to do all this work for you. The seller's paying them. So it's not like it's any money out of your pocket to have all this extra help and all this extra negotiation power on your side and have someone to be able to guide you through the whole escrow process, know what to do when, make sure you're keeping yourself legally protected, making sure you're getting the best deal possible. That buyer's agent is completely free for you, so why not take advantage of it? Is it worth saving a couple $1,000s to go with the selling agent and have them say, hey, we'll knock the price off by $2,000 since you're going with me? Usually ends up where you're saving more money by having that buyer's agent on your side, negotiating all these different things throughout escrow. And then if something comes up during escrow, you know you have someone on your side to make it as smooth as possible when these bumps inevitably come up during escrow that might happen. When you're dealing with escrow, it's always hard to say for 100% that there's not going to be any issues whatsoever. So having that buyer's agent on your side really gives that extra security, as if something pops up, I know I'm being taken care of. I know I'm going to get the best deal I can because I have this person looking out for my interests. So I hope that makes sense.
Yeah, and I'll say too, I mean, I feel like just humanly, no matter how ethical and amazing that listing agent is that you might want to work with as a buyer's agent, just how can you really look out for both parties' best interest? You know, I feel like
Yeah.
no matter how good and how great and kind-hearted the agent is, it's just so hard to do in that kind of situation. But yeah, I mean, completely no additional cost to the buyer. I think knowledge pays tenfold than trying to save a couple bucks in the beginning.
Yeah, and that's the thing. I mean, not all agents are bad. Not all agents are trying to rip you off as a buyer
Yeah,
out of money.
definitely.
But like you said, I mean, there's no way for them in terms of that fiduciary duty to be able to look at for 100% of your best interest as well as 100% of the seller's best interest at the same time, because they're getting all the information from both parties, and they have to decide how to discern that and what who gets to share what, and it makes it really hard for the agent to be objective when you're trying to go back and forth during these negotiations.
Yeah.
So
All
great
right.
question. So yeah, so for one for you, probably the most common question I get in terms of the loan side of things is when you're trying to purchase a home, do you need 20% for your down payment in order to get a loan?
Yeah, I still definitely get that question a lot. And especially with everything going on with the pandemic, it's been more of a question lately. A lot of people have the misconception that basically all loan programs you need to have 20% down now, when that's completely not true at all. And so, what I will mention, I mean, with no, you do not need 20% down. There are programs that allow you to go with 3% down, 3.5% down. So, much lower down payment options are available. And so, on top of that, what I will mention too, a lot of people ask me whether or not they should wait until they have a higher down payment because maybe they're not comfortable with the payments, or, they just want to make sure that whatever terms of the loan is the most favorable. And so they think that they need to save up for a higher down payment. But I did kind of draft up like a quick example. Like if you were to buy a $500,000 home and maybe you had a 5% down payment currently, and then I've had people tell me like, okay, actually, I want to save up an extra 5% and get to the 10% down payment. But realistically, with life, I mean, if you're currently renting, it's going to take some time to save up that additional 5%. And rates are currently at historic lows. And so I just wanted to kind of give an example of, okay, 5% down payment. Let's say you were to buy a $500,000 home. Rates are in the low threes currently. And then if you were to, let's say, wait until you had the 10% down payment, so lower loan amount, you would think that the payments would be much lower once you are able to save that amount. But even if we assume no appreciation, which isn't true, I mean, the appreciation rates are positive for the next couple of years. But even if a year from now, the home price is still the 500,000 you were planning to initially buy with the 5% down, that 10% down payment on that same home, if the rates are up to, let's say, around 4% a year later, despite the fact that you're coming in with double the down payment you had prepared a year ago, your payment's still going up by over $100 a month. And so even though, it's kind of strange, a lot of people think that the down payment's the main aspect that will impact your monthly payment. But when it comes to actually calculating out the cost of waiting, and again, this is actually assuming there's no appreciation at all on the property, which is highly unlikely. But despite the fact that you double your down payment, your payments could end up much, much higher.
Yep, got it. Yeah, I mean that's something. And then how many of the loans that you usually do? I mean, how many of them are 20% and greater, and how many of them are under 20%? I mean, is there obviously you don't know the exact number, but just kind of a gut feeling?
Yeah, I mean,
Is it?
honestly, especially for first-time home buyers, I think once they sit down with someone and see the payment breakdowns and everything, they realize like, okay, maybe I don't need the 20% down. So it's actually very common to see under a 20% down payment kind of purchase. And for a lot of people too that have the 20% down payment prepared, when they actually see the comparison between, let's say they find a home that's a little bit outdated and they want to do a lot of renovations to the kitchen. I mean, the mortgage is one aspect of your entire financial portfolio. So we don't want the client to be in the position where they throw all their money into the home. They don't have any money to play with after they buy the home and they have all these
Yeah.
renovations they want to do. And so rather than having to put that on a credit card, I recommended, okay, let's lower the down payment slightly and let's see how the payment changes. The payments change by about $30 a month. The cost of borrowing a mortgage has never been cheaper at the low 3%. And so if we compare to a 19% credit card debt later on and try to push and pour all the money into the down payment, it doesn't make a lot of sense. So those are the kind of structuring conversations I typically have with people. And so with even 20% down, they have that money. Some clients will choose not to put that full 20% simply because the payments don't differ very much and they have much bigger plans and longer term plans for the home.
If someone hasn't talked to a lender before, it's their first home, that's probably a question I get asked 90% of the time. So
Yeah, no, and I mean, it's still and will probably always will be that myth. But yeah, definitely just important to know. Talk to someone and at least ask the question, and you'll get all the answers. But I guess another question I get a lot from, I guess, first-time home buyers in general will be, can I get my initial deposit back, the money that you put into escrow initially?
got it. Yeah. And that's something that a lot of people are scared of is okay, once I go into escrow, am I going to lose this money? So, in terms of the initial deposit, it's called an earnest money deposit. And what that basically is you're usually paying anywhere from 1 to 3% of the total purchase price. You're putting that down at the very beginning of escrow saying, hey, I intend to buy this property. Here's some money I'm going to tie up because I'm serious about purchasing this property. And it's going to apply towards your down payment at the end of escrow. But a lot of people are concerned that you put that money in, you get into escrow, and if something happens where escrow falls apart or you have to exit escrow, that money disappears. And that's not the case generally. So basically what happens is when you go into escrow, you're going to have these things called contingencies. And that's basically a way of protecting the buyer during escrow and allowing them to get everything they need in terms of looking at the house for what's wrong with it, making sure that it's appraised at whatever their loan value is, and then also making sure that they can get the loan for the property. So there's three main contingencies. There's the inspection, the appraisal, and the loan contingencies. So if those contingencies are in place, then you can get your money back if you pull out of escrow. So let's say you go inspect the property, you find a bunch of things wrong with it, and you really are uncomfortable about purchasing that house unless a lot of them are fixed. You go to the seller, you submit a repair request, and they say, no, we're not touching any of these. You buy the home as is, or you're not purchasing the home at all. And in that case, you can say, okay, well, we're not going to purchase the home then. We're not safe, or that we don't feel comfortable going forward with this. So at that point, because you have those contingencies in place, you can go ahead and exit escrow, and then you'd be able to get almost either all or most of all your deposit back. So the only time you really lose a little bit of deposit is if one of the situations I've come into is with the HOA fees. Sometimes lenders have to go in and they have to pay for things up front. In that case, you might lose $100 or $200. So make sure you talk to your agent. Every offer is going to be a little bit different, so you want to know those risks involved. But as long as you have those contingency periods in place, you're good. Now, the portion where you can lose that money is if you take all those contingencies off. So you go through the repairs, you agree with the seller what needs to be fixed, they're going to fix it. You go through the appraisal process, everything comes out fine. Your lender gives you a full 100% yes, we're going to close, everything's good with the loan. So you remove all those contingencies, which you do have to do manually. It doesn't just happen automatically. You have to sign a piece of paper that says, yes, I remove this contingency. Once all your contingencies are removed, then you are locked in to purchase the house. So let's say 20 days in the escrow, you remove all your contingencies, then you go out and purchase a boat for $50,000, and that screws up your loan, and you're not able to get the loan anymore because all the numbers are off financially. Then in that case, whatever money you put down in deposit, the seller can keep a certain percentage of that. So that's something that I always warn people about. And I know, Mina, I know you talked about this with your buyers that you help, but you want to make sure you're not doing anything drastic during the escrow period. So you're not taking your credit card and charging up and buying all your furniture because you're so excited about your new place and putting $10,000 of debt onto your credit card, getting all these things set up to be able to have brand new furniture, fridge, all that kind of stuff when you move into the house. You really want to make sure everything stays the same from when you entered escrow to when everything closes. Once escrow closes, you can feel free to go through with your credit card and buy stuff if you want to. Yeah, but you need to make sure you can't buy that boat until after escrow closes, because that's where you can run into issues. Is once you remove those contingencies, if you do something that's going to mess the loan up or something happens where you can't purchase the property, then the seller is going to have the option of keeping that deposit you put in there for the trouble of them basically going through the whole escrow process, and from no fault of their own, you cancel at the last minute. So if that makes sense, that's really the only time you'll lose the whole escrow or the whole deposit during escrow on there.
Yeah, no, I feel like especially with that note, yeah, I think one tip I'll give anybody who's entering escrow, be in close communication with your lender, just because at the very end of escrow, they're going to basically do something called a soft pull on your credit. And so they're going to double check to make sure you didn't get any new debts. And actually, a colleague of mine had a client that bought a Maserati right before they're about to close on escrow. And I always joke around and bring that up, but no, it definitely can change the ratios and change the qualifications altogether. And so what I usually recommend for my clients, even like the ones that are very well qualified for the home that they're buying, I still recommend them to just run any big purchases by me, and I'll check the ratios. And if it's okay, and one time a client wanted to buy plane tickets and they wanted to make sure they get the miles and the points, I give them the thumbs up beforehand. And so just make
Yeah.
sure you're doing that with your lender too, because the last thing I would want is for anybody to lose their hard-earned initial deposit money.
Yep, and that's huge. Just make sure you're in contact with your lender. And that's one of the things when you are looking for a lender, make sure you have someone that's explaining this type of stuff to you and you're not just getting, hey, let me get that pre-approval, let me get going. You want to really make sure that you sit down
Yeah,
and understand
push
what you
button.
can and what you can't do when you're going through escrow, before escrow, that type of thing, so you know that you're not going to have any issues once escrow is open on there. Okay, so another one, a lot of this has to do with the money side of things. So I know we talked about the 20% down. Doesn't need to be 20% down, especially first-time homeowners, especially in Orange County when you're renting and paying $2,000-$3,000 a month trying to survive with rental. Trying to save up a 20% down payment is very hard for a lot of people. So that's one of the reasons I always want to bring that 20% down is not needed to purchase a home. So another one is, okay, well, I have the down payment, but basically I want to know how much should I have prepared on top of the down payment for this thing called closing costs. So if you want to kind of describe that and go into, obviously it's going to be different for everybody, but just kind of some general information a lot of first-time home buyers should know about the closing cost side of things.
Yeah, like the general rule of thumb I would always recommend to my clients is usually about 2% of the purchase price. And that's going to cover the closing costs. And then with closing costs, a lot of people think that they're all going to be just costs. But within the closing cost category that people mention, there's going to be something called prepaid items and escrow title fees, of course, the lender fees, those are the actual costs. And then also something called escrow account reserves if you choose to have impounds. And I won't get too much into detail about that, but bottom line, if you have prepared about 2%, that would probably cover a majority of everything. And it's typically a little bit lower. But again, I'd rather have everybody prepare for more and end up less than the other way around. And the interesting thing too is a lot of people think that, with a big purchase like a home, you want to know all the exact numbers up front. And I totally understand that. I would be the same way. But unfortunately, we can only provide estimates until we open escrow. And the reason why is one, the prepaid items are really depending on the day of the month we close, and also the reserve section of the closing costs. But then the escrow and title fees, depending on the company, the fees are going to vary. And we actually don't know which company we're going to be working with until we officially open escrow, since the listing agents are the ones typically picking which company they want to work with. And so what I would just, I guess, say in general, have the 2% prepared, but just know that you're not going to know the exact number until we open. And once we do open, what I would usually do is call and reach out to every third party, every company charging you anything for, the home purchase, and then consolidate them into a detailed disclosure document called a loan estimate, where you could actually see what exactly the fees are going to be.
Got it. Yeah, and that's usually what I'm talking to with buyers as well. So 1.5 to 2% is usually what you're going to need. That will cover most of it. Depending, I know there's some situations in terms of special loans and things like that where you need to put more up front, and you have to pay more to be able to get a better interest rate, like points and that type of thing. So I mean that's something to consider as well. But again, these are the things you want to be talking to with your lender before you go into escrow, so you know the programs you qualify for, so you know what the pros and cons of each of them will be, because some of them you do have to put more up front and able to secure the lower interest rate. So you want to know that before you get into escrow, and then all of a sudden you have this giant fee at the end that you didn't know about. So again, it's important to make sure you have that sit down with your lender before you really get into escrow, so you have all the stuff figured out, so there's no surprises during escrow and you don't get caught off guard by anything.
Yeah, and I hate surprises. Yeah, the thing I always tell everyone too, I mean, in real estate side, mortgage side, unfortunately, there's a lot of yes men out there who will just say yes to everything a lot of people want to hear. But yeah, I mean, I would rather much hear the truth than a yes man and then be surprised later on. So I think definitely the trust factor is super important when it comes to picking what team you're working with.
Agreed.
Yeah, and
Perfect.
then I guess another question that I hear pretty often, or lastly, I guess, but when putting in an offer, do sellers typically only look at the offer price when considering which offer to decide upon?
Yeah, so that's a good question, especially right now, because right now we are in a hot sellers market in most of Orange County
Yeah,
and Riverside and a lot of Southern California in general, because demand is so high with these low interest rates, and a
very
lot of people just
competitive.
yeah. A lot of people haven't really been putting their homes on the market yet because there's still, again, a little bit more risk. I know we talked about this in previous videos, but there's a little bit more risk for homeowners, allowing all these people inside your house, whereas buyers, you can really get away through and going through the entire escrow process with maybe having one or two contact points. So I can understand why the listing side of things has kind of lagged in terms of where the buyers are and the demand is right now. But as things open up, we are expecting hopefully more sellers start entering the market. So at this point, because it's such a heavy sellers market, you need to do everything that you can to be able to stand out in terms of your offer. And a lot of that actually doesn't have to do with asking that price you're offering on there. So a lot of people think, hey, if I'm not the highest offer, I'm not going to be able to get into escrow. That's just not the case. And I just had one recently where someone had an offer that was way above asking price, but they didn't accept it because they had some concerns about the financial side of it. They weren't as flexible as some other terms. So I just want to go over some of the other things that is a common way when you work with an agent that you can really try to dial in that offer. So the first offer you give them is really going to appeal to the seller. So first, you want to make sure your agent is calling all of the selling agents that you're putting offers on, because that selling agent might have some information that they don't put on the MLS in regards to what the seller is looking for. They might want a long escrow, they might want the shortest escrow possible. So if you're able to be flexible with your move-in date, that's going to go a long way with a lot of these sellers, especially the sellers that are trying to sell their home and they have to take the proceeds of that sale and purchase another property. Giving them some flexibility on the back end to be saying, hey, you have, instead of 2 weeks to find a new property to place an offer on and for yourself to get into escrow, you can say, hey, give yourself a month to find a new property. I don't need to close escrow for, let's say, 60 days instead of 30 days. And that, if you don't have the highest offer price, but you're giving them that flexibility, that seller feels more secure that, hey, this is going to go through. I have the flexibility I need. I feel confident that I'll be able to find a home in the next month versus having to be restricted by a 1 or 2 week window. So maybe it's $5,000 less, but I'm more comfortable going with this offer because it gives me that flexibility. And there's other things that you can do as well. Like I said, with the close date, flexible as possible is great. Another thing, especially in this market right now, is with sellers when they're placing offers on homes, a lot of them might not be getting accepted because it might be a multiple offer situation. So again, not only being flexible on the close date, but there's another option you can put into the offer and basically saying that, hey, you can rent back this property from us after we purchase it, and that gives you even more time to be able to go out and either move your stuff to a new home or go find a new place to live. So if a seller doesn't necessarily need the proceeds of this sale to purchase a new home, they might be open to saying, hey, let's close escrow in 30 days. I'll have the cash to be able to go find another home. I don't necessarily need it, but it's nice to have. But in the meantime, I'll rent the house back from the buyer for whatever the market rate is or whatever you negotiate during escrow. And that way the seller has an extra month to be able to get out of the house, find their property, close escrow. So these are things that you don't really know about unless the agent calls the seller agent and selling agent and finds this information out. So it's extremely important to make sure that if you're working with an agent, they're not just placing offers and hoping for the best. You want to make sure you're really digging deep and finding as much information as possible to get your offer the best chance of getting it accepted. So another one that you hear a lot of things about is the cover offer. The cover letter. So the cover letter is something where you're just giving a brief description of one, kind of who you are, who your family is, it's why you're looking to purchase a home, as well as things about the property that you're putting an application in for, or an offer in for that you really like, and you're just basically trying to appeal to the seller, because a lot of sellers really love their home. If you've ever owned a home before, your family grew up there, you have a bunch of memories there. It's always a bittersweet thing to be able to sell a home. Yes, you're getting money, you're moving on, but there's a lot of memories tied up. So if you're able to tell the seller, hey, I'm starting a family of my own, I have a kid, I want to grow up in this house, make great memories, that really can emotionally connect with the seller. And maybe if your offer is a couple $1,000s less, again, because they have that information about you as a buyer, they're saying, hey, you know what, yes, the money's important, but I also want to make sure I'm going to have this house go to someone that's going to take care of it like we did, be able to make memories like we did, and that gives the seller that emotional connection to you, which again can help you get the offer accepted. And that has happened so many times when I've helped both buyers, and on the selling side, I've seen it happen where sellers accept lower offers when I'm helping them because of a cover letter that they really connected with that buyer for some reason. So it does work, and it's something that you really need to do on every single transaction or every single offer you put in there. And you want to make sure it's not just a generic form. You want to make sure it's specific to the property. So you're putting things in about that specific property you like, about the area, and that way they know it's not just some generic cover letter you're throwing on the offer and hoping for the best. You want to make sure that the seller knows it's about their house specifically. So those are kind of some of the things that you can really do to help draw out your offer. Again, even I've seen this when I'm working with sellers where they're accepting offers that are even $10,000 or more less than the highest offer, because a combination of the flexibility, the cover letter, and the different terms like that. So one other thing you could do, I know I talked about the contingency periods a little bit earlier in this video, but if you're able to shorten those contingency periods, that really makes your offer a little bit stronger, because the seller wants to know that you're committed to purchase the house. They want to lock you into purchasing that house as quick as possible. So if you're able to go through and tell them, hey, instead of the standard is 17 days to go through, inspect the property, submit your repair request, that type of thing. If your buying agent can go through and say, hey, my inspector's available 2 or 3 days from now, we can shorten that inspection window to, let's say, 10 days instead of 17 days. That's just going to give the seller confidence that if you find something and you can't agree to terms in terms of what needs to be fixed, that's all going to happen very quickly versus being dragged out over more than a 2-week period. So again, it just helps the seller have more confidence in the offer because they know that you're going to be locked in quicker and you're trying to move things along as quick as possible and not trying to drag it out. So those are just a few things. There's a bunch of other smaller details you can put in there, but that's something you'd want to discuss with your agent. Go through the whole contract, and you can kind of figure out which areas that you're able to be flexible with and which areas you can't based on your situation as well as the type of loan you have, because some lenders will let you say, hey, we don't need a 17-day appraisal window or appraisal contingency. We only need 10 days. We know they can get out there in 2 days. We know the reports get back to us in another 2 or 3 days. So let's go down to a 10-day window for appraisals instead of a 17-day. Or if you're putting enough down payment down, some lenders are even able to take out that appraisal contingency altogether. And just like if you're looking at it as a seller viewpoint, if you have less contingencies in your offer, again, you're going to be locking yourself into purchasing the home faster, so it's a more secure offer, which ultimately is what the sellers are looking for, is something that you're not only going to get into escrow, but you're going to close, and so they can start planning their move, whatever they need to do on the back end, and not to worry about, am I actually going to go through with this buyer? Is something going to happen where it's going to mess everything up at the last second?
So that's okay, no, that was good. Yeah, I feel like there's so much to go through with that too.
And that could be a whole that could be a whole video by itself. I mean, there's so many terms in the contract that could be, again, a good idea is to talk to the selling agent, but you can adjust so many different terms to make it look as good as possible to the seller that have nothing to do with the price of the home, that can really put your offer ahead of those offers that are going $5,000, $10,000, $15,000 above what your offer's at. So it's always a good thing to make sure you're talking to that selling agent. It's kind of the number one thing I would say that really goes back to making sure you have a strong offer up front. So on your end, so last question that I do here, especially with all the rates right now, is and how flexible they've been and up and down, and going all over the place. They haven't really been too consistent, which we've been used to, but the last couple of months have been crazy. Is really when can you lock in the interest rate on the loan? Do you do it when you go through the first pre-approval process? Does it not happen until a day or two before escrow closes? When does that approval or when does that interest rate get locked in so they know what their interest rate is going to be on the loan?
Yeah, so you can't lock in an interest rate until you get to the point where you're under contract for a home. And so until then, as far as the pre-approval goes, you have to really, again, just be in good trust and communication with whatever lender you're talking to, because unfortunately, they could actually technically tell you any interest rate at that point in time, just because you don't know when exactly you're going to open escrow on and actually get under contract for a home. And the rates have been very volatile. And so typically my process would be, when we're talking about the initial pre-approval process and going through that stage of your home buying, I guess. But basically during that stage, we'll communicate about the fact that, okay, rates are around here, but on average, they're around here. And when it comes to giving you payment breakdowns, just so you have a better idea of what your payments might be, I would typically use an average of where I've seen the rates in the past few weeks, just so, again, you have a safe estimate in mind without not putting in like 1% rate for every payment breakdown. But once we get into escrow, the payments end up being much higher. And so throughout the home search process too, it would just be a lot of updates on different economic reports and different, I guess, changes within the market, and try to predict when exactly it might be an optimal time to lock. Because once we enter escrow too, you don't have to lock on the day you open escrow. And this is where knowledge is super important, because most people don't really know anything about what impacts rates. They just know how to click a button. But what we look at very closely are the mortgage bonds and the values of the mortgage bonds. Because at the end of the day, whenever we look into, I guess, the mortgage bond pricing, and the rates do follow the values of the mortgage-backed securities. So when we start noticing a big drop in values of a mortgage-backed security, and it just consistently dropping in a very short period of time, during the day, maybe you do have the ability to lock. I might recommend for you to actually lock in before the rates have time to react to the values going down. Because typically the rates are a little bit lagged compared to what we're seeing with the MBS. And so that's kind of the strategy behind, when to lock and when not to lock. Or if we open escrow on a day where rates are just looking very ugly, then what we can do is strategize and say, okay, we'll float. And that means just not lock in the rate, but continue to process the loan. But then we start noticing, okay, on Wednesday, there's going to be this economic news report coming out that's actually pretty likely to improve interest rates. Let's wait until then and lock on the day where rates are improving rather than a day where rates spiked up. And so that's where, again, just make sure that you are talking with a knowledgeable individual so you're not locking in at a bad time. Because there are bad days to lock where the rates just shoot up, and I would never recommend to lock during that time.
Got it. Yeah, and that's a lot of thing I hear a lot with the pre-approvals, especially because sometimes it's like, hey, you're approved for about this much based off of this average interest rate. So a lot of people are kind of saying, okay, I'm not going to even talk to a lender until rates go down, and then I'm going to talk to them as soon as I see a really low rate so I can get pre-approved, and then everything gets locked in. So it's important to know that even once you are pre-approved, those rates don't lock, like you said, until you get into escrow. And you don't really know how long that's going to take too, especially in today's market for a buyer. You might be looking at a lot of homes, you might be placing a lot of offers on homes because there's a lot of multiple offer situations. You're not going to get a lot of times the first home you put an offer in on. So you could be looking for a home for 30, 60 days. So it's really hard to say, okay, I'm going to wait until this interest rate is this low and then I'm going to do a pre-approval, because you still might be 30 to 60 days before you even get into escrow. So those people are kind of waiting for those rates, and I'm going to talk to a lender when I get this amount. You have to realize that it's not locked in, like Mina was saying, until you get
and
into
I think
escrow.
one more thing I would add to that too is there are very few things that's, I guess, under our control when it comes to buying a home. I mean, the thing that you can control a lot of is one, are the home you're buying, right? I mean, although it's going to be competitive and it may be difficult at times, if you can focus on how many bedrooms, how many bathrooms, like those kind of details, which you can definitely try to pinpoint and control, and not really focus too much on where exactly the rates are going to be on a given day and given time. At the end of the day, let's say rates do go up. And on average, honestly, the rates below 4% haven't been seen. I think they've only been seen about statistically 5% of the time, probably in the entire history of mortgages. And so under a 4% is already an incredible rate. But even if the rates do go up, if you find that home you love, you're comfortable with whatever those payments are, you lock in and basically buy that home. And later on, if the rates do improve, you always have the ability to refinance into that lower rate. And so that's something that you can change, but the home you want to buy and the home you find, that's something that, once you buy it, you're able to keep it. But once you lose it, you're not going to buy that home.
Yeah, and that's definitely something that I talk to a lot of buyers about too. Is that, I mean, they don't really know how much they can afford. They don't know in terms of what their payments are going to be. So the best thing to do is really talk to a lender. They don't charge anything. I mean, it's not going to charge you $1,000 to talk to her. She's going to give you this information, go over your financial situation, and figure out what you can afford, as well as what your payments would be based on the type of home and the price of the home, so you can understand these numbers and say, hey, I can afford this. It's a good time to buy. And like she said, if the rates go down, which right now, this last month, I mean, they've been at historic lows, and they might go down even farther, but they're not going to be going down significantly farther. So the rates are great right now. I've had people, a couple people actually, at the beginning of this year purchased a home and already refinancing because the rates have dropped so significantly since then. Not to mention the last couple years. I mean, you're looking at a few years ago, the rates were in the 4% or higher, and that's a significant savings when they refinance. So you know that in the future, if they go down significantly lower, you can get a better rate later on. So you really want to make sure you're just looking at what you can afford currently and making sure, hey, if I can afford this payment, am I able to find homes that fit the type of home I'm looking for this payment? And if so, that's kind of the first indication that yes, okay, you probably should start looking for a home right now, because it's really hard to say where the interest rates are going to be a month, 2 months from now, especially with everything going on. So you want to make sure that if you can afford a home and the home is available in the area you're looking for with the type of amenities you want, it's time to start talking to a lender. So it's been a bunch of great information. I know there's a bunch of other questions for first-time home buyers as well. Mina, I know you're putting a lot of content right now. What's the best way for them to find you? And I'll link it up in the bio in the show notes as well. But what's the best way to contact you if they have any additional questions?
Yeah, actually, I have my Instagram handle right here. I do try to post out educational content for anyone who might be thinking about buying a home way down the line. I think you just have to gather information and educate yourself way early on in the process, and it'll speed up when exactly, you'll be able to buy a home in the future. But other than that, email is always great. And then also, if you go to my Instagram, you can have my phone number there too. Call and text is great as well. And I guess, phone number wise, I'm not going to say, you can find it on the Instagram handle, and Josh will include it in the description. I'm like, they're probably not going to remember or write it down. So I'm just going to let YouTube or wherever it is take it.
There you go. Okay, perfect. Well, thank you again, Mina, for helping us out with some of these questions. I really appreciate it. And
thank you for having me.
Call it a day. Absolutely no problem. And talk to you guys soon. Bye.